friends, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to a brand new episode of Investment Ideas series. For today, we're looking at an alternate way of investing, which is very popular, and that's real estate. And how do you do that? It's through REITs, REIT, Real Estate Investment Trust. So let's see what do they mean and try to understand whether it fits into our investment portfolio or not, right? So without wasting time, let's get into it. If you're not subscribed, please subscribe and share to our previous friends. We already had done a investment idea series based on gold. If you're not watched, please look at the watch list and then look at the playlist where you can see that also. So let's get into the details. Yes, what is a REIT? Right, REIT is it's related to real estate. That much we know, right? So real estate has always been very popular investment options for apart from the gold for the Indian investors, you can say. But this REIT, the concept of the REIT, which is some kind of investment option in um, real estate, came into existence to a proper channel like the stock exchange in India in 2019. It was listed in stock exchanges, right? Now it is available in there are 3 or 4 REITs that are available already, and many are in the queue. That's there in both the exchanges, BSE and the NSE. So basically, REIT is an investment vehicle, that is very similar to the mutual funds, right, or ETFs that way. And it is that REIT or that instrument consists of a portfolio which is made of properties in the sense real estates, right? Real estates of what nature? Commercial, and or it could be residential also, but income should be income generating. So, but mainly all these REITs are based on commercial buildings and office spaces, right? So REIT basically consists of a real estate, REIT trust. It's a charitable trust, similar to that. It's not a charitable trust, but it is a trust, for the financial purposes. The trust will be formed by the sponsor, and a good amount, certain amount of minimum amount is kept by of the REITs are kept by the sponsor, and others are distributed in exchange of units in the share market. That's what. So yes, that is fine. It is fine that we have a trust formed, and the trust will have the ownership of the properties, and the properties will be income generating, and it is tradable. But how do you make the money, right? So REIT, obviously, the properties that is owned by the REITs are, are income generating steadily, right? Depending on how, several factors that we will see later. But um, REITs is a way that the investors can get a steady or a regular income. It may not be like a stock which shoots up the price and then comes down, and then so there's no steady income there in a regular stock or a derivative or whatever. There's no steady income. This is more or less kind of a steady income that you get. So that fits in that investment philosophy where regular income is sought after by the investor, right? So it is why, because it is mandatory for the REITs to distribute, as per the SEBI regulation, that 90% of the income that it generates has to be distributed to the investors. It's mandatory. So the ownership of the property is with the REIT, and the property will generate income by rental office spaces or commercial buildings or whatever, and then that will be 20% of that need to be distributed back to the investors. So that is how we REITs are, and trust is kept by the trust itself. 80% of the REIT must be completed properties. It cannot be like the real estate properties that you see where it does not get finished, forever. There are a lot of examples for that. So here, it cannot be like that. It is mandatory and regulated by the SEBI. Says that 80% of this has to be completed properties. Others can be ongoing projects, right? So that makes sure that the steady revenue income part is there in the REIT that is formed by the trust. Now the REIT has a minimum 500 crore. So the property has to, property or the commercial building or whatever has to be minimum 500 crores of worth, so that there is substantial benefit to the investors when it is distributed across. And REITs are managed by the fund managers, professional way, just like mutual funds are distributed. So these are so real estate fund managers basically would have their income also associated with the REIT. Obviously, sponsor also keeps a share of that, so it is income for him also, and it is mandatory to have 80% and completed projects with 90% mandatory to be distributed. So obviously there would be a steady income is what we can understand. That is the reason why, and that is how we it's a good way of putting your money invested. Now why further, if you look at why REIT, why can't we get all of this that we talked about from some other investment vehicle also, but why particularly REIT is because one thing we already discussed, it gives a regular income investment method, right? We're just combining, so debt instruments like bonds and all gives you a regular income, right? So it combines that with equity because the REIT is listed in the market. The REIT itself has a price fluctuation, price increases that can happen. So that is benefit from the price, the capital gain that you get. In addition to that, you have the benefits of what you get similar to from the debt instruments also. So it's a combination of both with the regular income. It's a good portfolio diversification instrument. So investing all your money into stock market or a particular sector, energy, or into stock markets or a particular sector in stock market, or only in gold, only in debt instruments, only in FD, it's always a risk, right? For example, right now FD is of it's of due to inflation, there is hardly anything that it's negative returns. Real returns that you get in FD is negative. Gold is also not moving since last 1 year. It shot up but not moving. But there was a time last year when gold shot up and then markets went down, right? So it's all market cycles and commodity cycles and time cycles. They keep changing, right? So diversification from that perspective, it is a very good option to do. So if you want to diversify in real estate, and you don't necessarily need a 1 crore, but you necessarily need a 1 crore to buy a flat or a commercial building nowadays in any of the prime cities, right? But you don't need that kind of money to diversify your investment portfolio into real estate also, right? Because you can buy it at very low cost. No, more than that capital that is required, more importantly, it is the liquidity. Imagine you have a real estate worth 50 lakhs and you're trying to dispose it off. How much of trouble, how much of money goes to the real estate? How much of process and procedures and formalities has to go through before you get that investment returns back in your hand? A lot of money gets lost. There's a lot of risk involved in the liquidity part of it. Capital wise also, REIT benefits because you can buy just like a stock. REIT may cost 100 rupees, 200 rupees, 300 rupees as of now, right? So it's just like at the price of a stock with a minimal, there's no minimal quantity. You can buy 1 or 2 REITs also. So you can invest any amount, any small amount also in that. And the third factor is that there is less risk. You buy a property and for 50 lakhs and a project never gets completed, or you have a project for a property of your own and you rent it out and the tenant is not moving out or not giving money. There's a lot of headaches and risk of that nature is not there really. For someone who would like to participate to invest in the sector, have a portfolio diversification, have a regular income, but with a high liquidity, less capital cost and less risk. That is advantage. That is why we need a REIT. Now, yeah, so you can buy it just like we already mentioned. You can buy it just like a stock from all the popular brokers like Schroders, Upstocks, whatever, wherever Fyers or wherever, anywhere you can go and buy because it's listed in both exchanges, just like you buy a stock. And the dividends get dividend interest or whatever you get back as a rental income from the trust gets directly credited to your bank account, just like other investment dividends. How do you choose it? There has to be a certain criteria. So right now we have only three, right? But there will be more that will be coming in. But so what are the key four things that you have to look at? There may be a lot of financial ratios that may be associated with which you can research, but at a higher level, four things. One of them, quality of the developer matters. Right? Is this a repeatable developer projects that has already been completed, done on time, delivered? Who is the person behind that management team, and all that matters a lot. The quality of the lease matters, right? Quality of the lease in the sense, are they MNC tenants, or are they IT companies, or they're long term? What is the duration of the quality? So duration of the lease, and all this matters because longer the lease, lesser the risk, right? The third thing is occupancy rate, right? You have a large building, but only you have good tenants, quality developer, everything, but the rate of occupancy of the entire building is less, means that is also a thing that that you'll have to look for before you pick the REIT. Third, other thing is location. A lot of these real estate developers are specific to certain areas like South India or one city, Bombay only. So it's always better if they are more diversified demographically. If they have projects across different parts of the country, the better, because in case of any lacks in the business prospects that happens in one part of the country, it could benefit in some other part, right? So always the more possibility of a rent can come in, better it's, the returns that comes to the investor. It depends on that. The more because it's equal, 90% of the profit is equally divided. So more profits are better. Now, which are the popular REITs? As of now, only three are available. Embassy. You can look at this link to see in the NSE India site or Google it out. This is BSE site. Right? Basically, all of these are available in NSE and BSE, I believe. Brookfield, Embassy, and Mindspace. They are all groups or property developers with institutional participation also there, and also they have projects across multiple cities, right? As of now. And yeah, so how is the tax? Tax is just like a dividend tax that you are getting. You buy ITC share and you are getting dividend, and it will be taxed based on the slab bracket that you are putting. And you have to pay the TDS based on how much of ITC stocks you hold. What is your income bracket? So same way, there's no difference at all. Just rent income, trust or dividend, whatever it is treated the same way. Capital gain also treated. Capital gain was on the stock that you purchased. The REIT, you are purchasing the REIT, and the price of the REIT is at 200, and then shoots up to 500, and you kept it for one year, less than 1 year. That means short term gain, capital gain. Otherwise, long term gain. So that rates are all the same, just like any other stock. Now, what is the future of a REIT? One major important thing that you keep in mind is that REITs is not some new concept that has come into our market recently. It has been there since long time globally. Across the globe, the REITs, trusts or real estate investment, this particular investment vehicle has been there for long, and it's matured also in other countries. It took some time for our regulatory authorities to properly look at and form rules behind that, and then have them listed properly. Still, it is at the very early stages. Most of the people do not even know, is the reason why I made this video itself. So this is definitely an alternate way of diversifying a portfolio into a very lucrative sector in the real estate, right? So the thing is that many developers are there, big developers like Brokerage and Tatas and DLFs, and all these people have not come out with the REITs yet, right? A DLF coming out with the REIT does not mean that the entire DLF is into a REIT. DLF may be having a 5 commercial property projects across 5 cities, and that ownership is converted into a REIT, and they can come out with that. It's just that also a lot of people are getting invested, and large developers can come in. A lot of institutional investment has already come in. REITs like Brookfield Embassy has got a lot of real estate foreign institutional money that's already there. So more institutional participations in the trust themselves can come in. So the more institutional participations there means obviously the stock price, the price of the REIT also will increase, and obviously the fund managers will start generating more income out of the properties or the projects that they are owning, they're managing basically, right? So another thing is in a country, emerging market like India, a country like ours, where the prospect for more demand on this office spaces, commercial space will only keep on increasing in the in the coming years in the long term basis. Even the COVID crisis has been over. This nothing happened to this REITs. REITs were there before that also. So going ahead, it is only no matter what work from home is there, demand would be keeping on increasing as long as our country is developing and it's an emerging market. So the prospect of real estate and prospect of commercial and office spaces will is on the growth trajectory, and that means that these REITs will be even more successful and more participation will come in with that. So I hope you're convinced enough. But this is not a recommendation. It's just a educational purpose. If you're not aware, then you can do your own research and then find out. There's not much historical data on what is the dividend returns for last 10 years. You don't have that, but you can at least look at those parameters that we discussed earlier and evaluate and invest a part of your portfolio into real estate this way. Hope this helps. If you like it, consider hitting the like button and share it with your friends and colleagues so that everyone benefits. Thanks for watching, and happy trading and happy investing.